Welcome to Tearsheet's Outlier Briefing. This subscriber-only content is exclusive for our Outlier members. We go deeper with subject matter experts to take actionable steps that can impact your business and practice. The Consumer Financial Protection Bureau recently released its final rule covering remittance transfers. While the Remittance Rule requires transfer providers to generally disclose the exact exchange rate, the amount of certain fees, and the end amount expected to be delivered, it also allows certain banks and credit unions to continue to provide estimates of the exchange rate and certain fees under certain conditions. Today's guest is Nick Catino, Head of Policy and Campaigns for the Americas at TransferWise. He joins us to brief us on the CFPB's final rule regarding remittances and what it means for fintechs, banks, and consumers. Here's our Outlier Briefing. To hear the full audio and to access all of our exclusive member-only material, head on over to tearsheet.co/outlier.
Hi, Zach. Thanks for having me on. I am Nick Catino, and I am Head of Policy and Campaigns for the Americas for TransferWise. There was an important section in Dodd-Frank that dealt with remittances. So previous to Dodd-Frank, it was states that regulated the consumer protections and the way disclosures worked when money moves from one place to another. The recourse is available to a customer if something goes wrong in that transaction. And so Dodd-Frank included this really important section that created the Remittance Rule. And this Remittance Rule now requires banks and providers to disclose the amount of money being sent from, say, here in the US, the exchange rate used, and fee. And so Dodd-Frank, a lot of progress. There's more transparency in payments as a result. But there's one important piece that was not included. And this is what we're trying to change. And I'll explain what the CFPB did now. And that is they carved out community banks for the most part. So community banks are now exempt from a lot of these disclosure requirements. When you see fee, we think it should be like the World Bank or the new European Union rules, which require total costs to be disclosed. So in the US, a lot of banks will often have a zero next to fee. And so as the consumer, you're like, wow, this is great. There's no cost to send money. And then they jack up the exchange rate, sometimes 5% or more. And so as the consumer, unless you conduct a complicated calculation to figure out how much you sent at that exchange rate compared to what the exchange rate you see on Google is, you would have no idea the real cost of that transaction. And so we're optimistic that this is going to change, but it just hasn't yet. So far, it's just TransferWise and a number of the banks we've partnered with. So that's where the progress has occurred. The banks that use our technology, we connect directly via API. So you're on a bank's app.
TransferWise for banks?
Exactly. TransferWise for banks, N26, Monzo here in the US, Novo, Stanford Federal Credit Union. You'll have that same TransferWise experience. And that also means your fees will be fully transparent. I think consumers, for the large part, do not know what they're being charged when they send money. That keeps costs artificially high. And as a result, consumers lose billions. Yeah, we've seen a lot of forward-thinking countries modernize their payment system in a way that the U.S. has not yet, but that the U.S. is starting to talk about.
To hear the full audio and to access all of our exclusive member-only material, head on over to tearsheet.co/outlier.